Hi guys, today is May 8th, 2020 and futures are pointing to a higher open as non-farm payrolls came in as they fell by 20.5 million versus 21.5 million expected. Unemployment is to 14% versus 16% expected, so it's a better number. So people are very optimistic, and California governor said that they're planning to reopen very soon. So people are jumping into the stocks, hoping that the economy will restart very soon. So let's jump to SPY. SPY, I'm looking for this convergence of the MACD here, but looks like SPY is going higher, and I don't know how it's gonna proceed, but for now it's very news driven and not technically driven. But I would be very careful again, but I'm looking for pockets of opportunities. So let's jump to corporate news. Uber said that they reported wider loss, but beat analyst expectations, and saw 5% drop in ridership during the quarter. Orders for Uber Eats, though, jumped 52%. So Uber is trading higher, but I don't know if this is a good environment to be in Uber. But in general, closer to $30, I would consider Uber. And they didn't report that bad of a number. And Lyft, as you remember yesterday, also reported decent numbers. So those two actually not disappointed. Okay, so that's good companies to watch, in my opinion. LYV. Live Nation Entertainment. It's basically a concert company, and they provide live events. And this company said that they lost more than expected on EPS revenue in line. Saw concert revenue drop by 25% in the quarter, worse than they expecting worse next quarter. So I don't know if you want to be in this company in this environment, LYV, and I would wait for a pullback in this company. I mean, eventually they will restart and eventually they will do well, but for now I would hold. Zillow Group. That's a company that provides data and on real estate on their website, and also they're buying houses as part of their businesses. And they said that they lost an adjusted 26 cents, which is 9 cents smaller than expected. Revenue well above estimates, but said that they were withholding guidance, and actually much stronger numbers from Zillow. Actually, I was surprised by this. Because showings of the houses are closed, and people are not looking for new houses or houses in general, but they're doing pretty well. So that would be an interesting company to buy. I think it's going higher. Stock symbol Z. Okay, Roku. Roku reported that the inline quarter on EPS revenue above, but average revenue per user jumped 28%. But in general, Roku had a big run recently, so to go higher they needed to have a perfect quarter, and they didn't have that perfect quarter. So stock is down pre-market and probably will slide during the day. So I would stay away for now from Roku. Okay, so Disney had some news, and they said that they sold out all the tickets for Shanghai Disneyland reopening. And the government of China asked Disney to keep the attendance at 30%. So in general, I think Disney is trading a bit too high for me to get in. I think closer to $100 would be a good price for Disney, and actually lower than $100 would be a perfect price for Disney. But right now, pre-market is trading at 108, closer to $109, and that's too steep for me to get in right now. Okay, GM said that they priced new $4 billion debt offering, and they're still shoring up their liquidity. And I'm not a big fan of any auto manufacturer except for Tesla, as I told you before. And actually Ford said that they are planning to restart its North American operations on May 18th. And both stocks are higher, but I'm not a big fan of both of these stocks, and I like Tesla, and Tesla actually reported that they're planning to restart their Fremont plant in California this Friday, which is today. So we'll see what happens, but actually I like Tesla a lot, even though I see this convergence of the Magda here also. So I would be careful with buying Tesla. I would love to buy Tesla a little bit lower, but it's trading higher pre-market, and I don't know if I want to get in at these prices for Tesla. Okay, Yelp. Okay, Yelp reported that they lost 22 cents, double what analysts on Wall Street were expecting. A revenue beat, though, saw signs of stabilization. But I'm not a big fan of Yelp. I mean, they were in a big competition before this crisis, and right now this is even getting worse because I mean, a lot of restaurants are closed, and what are you using Yelp for? To find restaurants for the most part. So I'm not a big fan of Yelp, and I would stay away from Yelp this environment. DBX, Dropbox, they came in 3 cents above estimates, revenue beat, signed more customers as more companies shifted to remote work, and it's a file hosting company, and obviously that's a good environment for them, and this is an interesting company to be in. I would be looking at this company to swing trade or to buy for actually for longer term, because that's actually a good environment for them. DBX, Twinkies, Hostess Brands, stock symbol TWMK. Okay, so they reported a pretty good number. This snack food, it's a snack food company, beat the estimates by 1 penny. Revenue also beat as customers stock up on their products. But they withdrew guidance, and they worried about the supply chain disruptions in this environment. But the stock is higher, and in general, if it comes down to like closer to $11, I think it's a pretty good buy for Twinkies. Okay, RCL. Royal Caribbean had some news. They had a business update. They said that bookings were significantly lower than last year, prices lower, and 45% of guests requested refunds. And they're considering to adding additional financing, and entered into 2.35 billion 364-day senior secured credit facility. So they're struggling big time. I mean, as far as I know, they're losing like close to 500 billion a month when they're not sailing. So I don't know if you, I mean, I'm not a big fan of cruises, and I don't want to be in cruise lines in this environment. So I would stay away from Royal Caribbean, Norwegian, or Carnival Cruises at this point. Even though the stock is trading higher, I would stay away from this stock. FEYE. Okay, so FEYE, people saw some unusual option activity in FEYE. Okay, 50 times more calls than puts, concentrated in next week expiration in 11 and 11 and a half calls. So the stock is trading higher, and I have to see what the news is. But I saw the unusual option activity for next week, and this stock to keep an eye on. Okay, PFBT. Proofpoint actually reported numbers, and enterprise security software, and they reported numbers yesterday. They reported beat on top and bottom, and Citigroup maintained buy, and it was the price target of 166. So this company is trading higher, and obviously it's an interesting stock to get in my opinion. And I mean, enterprise security software, that's actually exactly what people need right now, and they reported a higher number, obviously. So this is a very good stock to get in, and I would be looking to swing trade the stock. PFBT. Okay, Aaron's. So Aaron's reported it's a lease-to-own retailer. They lease like furniture, electronics, appliances. They reported beat yesterday on EPS and revenue. Raymond James maintained strong buy, price target of $50. I mean, they had a run yesterday based on their earnings, and if they come down a little bit closer to like 32 maybe dollars, maybe that could be a good opportunity to get into the stock. YETI. YETI Holdings. Okay, so YETI Holdings is a manufacturer of outdoor products, and they showed better than expected Q1, but pulled guidance that was, I think, yesterday or a couple of days ago. And Citigroup maintained buy with the price target of $35. So it was an interesting company. I mean, people are not going outdoor right now, but as soon as they start going, they will jump into the stores and start buying their items. So YETI is an interesting company to be prepared for the reopen right now. Okay, IEP. IEP is the Icon Enterprises. It's the Icon, Carl Icahn's company, and they reported Q1 losses of $6.34 versus $2.02 a year ago. Revenue slightly higher than a year ago, and but the big thing about this stock is that they approved the $2 quarterly dividend distribution. So people like that, and they're jumping into the stock, and that could be an interesting stock to be in for this dividend. Actually, $2 is a big distribution number. Okay, so CPA. Copa Holdings. Copa Holdings is a Latin American commercial aviation provider of passenger and cargo service. And a couple of days ago, they reported beat on EPS, miss on guidance. But today, Raymond James maintained strong buy with the price target of $60. That's an interesting company, an alternative to the airlines, traditional airlines companies like AAL, UAL and stuff like that. So, I mean, they're trading pretty low in my opinion, and they've been trading, I mean, I remember trading this company at very high, like over $100, and now they're pretty low. And maybe it's a time to look at that as an alternative to traditional airlines companies. Okay, that's it, guys. Don't forget to subscribe to our channel and click the like button, and I'll see you Monday.